welcome to Inside Out, a show where we focus on individual stocks with in-depth analysis, deep dive into the financials and tell you about the key risks and triggers going forward. Hey Nigel.
Well, hey Sonal, we'll also put the spotlight not just on the key matrix that Sonal just mentioned, we'll ask questions that you want to ask. But let's not waste any more time. Let's get straight to the first stock that we're tracking. Sonal, you go first. What do you have for us on deep dive?
Well, you know, the stock that I am tracking today and the company that I'm going to be talking about is a technical textile players, and we have seen their products in daily life as well. Garwade Technical Fibers is the stock on my radar today, which makes nets for sports and fishing, twines for deep sea fishing market, industrial ropes, sports, agriculture and coated fabrics as well. It is the largest player for industrial ropes and marine hawsers. Has key customers like Reliance, we have Indian Navy, IOCL, ONGC, Indian Coast Guard, to name a few. And there are many segments that it caters to. Aquaculture, which is around 35%, we have fisheries at 25%, sports is 15%, geosynthesis at 10%, and other categories at 15%. The company exports 63% of revenues and exports to countries like US, France, Poland, UK, Colombia, Oman, Philippines, Singapore, Thailand, Australia, so a lot of names here. In terms of raw materials, most of them are crude derivatives. High-density polyethylene, polypropylene, nylon, polyester yarn and GI wire. They are some of the raw materials that the company uses. So let's do one thing. Let's get in the management to understand more about the company business as well, right? We are now joined by Mr. Shujaul Rehman, who is the CEO at the company, to take some questions and make us understand what the business is all about. Mr. Rehman, welcome to the show. So first up, as always, we would like to understand and get an insight into your products. Technical textiles, but what are the products, this segment that you cater to? Tell us how big the synthetic cottage market is and how big are you as a player, globally and domestically?
We operate in the overall technical textile space, which is a $200 billion industry globally. And it has got 7-8 segments, but we operate in 3 segments, which is agri-tech, geotech, and sport tech. So these are the 3 segments that we operate in. 60% of business comes from products which are supplied to companies or farmers who are producing food or agriculture or fish or catching fish. So we are very closely related to food consumption globally. We have about 65% of our sales coming from international business in the overseas market, and about 35% comes from domestic. In terms of key segments, the biggest segment that we operate is the aquaculture segment, which is almost 40% of value of global aquaculture. You must be aware that protein requirement for entire human population is increasing day by day. It's already 21 kg per capita and it's going to increase at the rate of 1% per year. So the demand for aquaculture is going to be there in the interim in the near future. And 40% of value is salmon. So we are in the salmon space, which is a big segment. We have close to 35 to 40% global share the salmon space in terms of aquaculture cages and equipment that we supply. We are also entering into non-salmon, which is the rest 40% of value, and we have made good strides. So that's the biggest segment, which is aquaculture for us. We also play in the segment of sports. We provide all kind of sports nets and equipments, primarily for Europe and American market. And there also we are another top player in the world. We are also a big player in both domestic mechanized fishing and international mechanized fishing, with a very high market share in India and double-digit market share globally. So these are 3 big segments for us, which is aquaculture, sports, and mechanized fishing. We also operate in protected cultivation through agriculture. We operate in geosynthetic, which is also a very profitable business for us. This is about the overall segment that we operate.
Oh, thanks, Mr. Rehman, for giving us that understanding. But I want to know more. Tell us, what are the key raw materials that you use in your manufacturing for your products? And are they locally sourced or are they imported?
So the biggest raw material is HDP and polypropylene, which is sourced locally. These are polymer-based products, and obviously they depend on import prices. 80% of our raw material is sourced locally from India, and we buy from Indian companies. 20% like UHMP, nylon, and polyester is imported. So 80% is sourced locally.
Okay, that is about your supply side. Let's talk about the products and the wide variety that you have available. Which is the biggest segment for you and the highest margin product for you as well? And what is the driver for growth? Is it volumes or is it pricing? Any new sectors that you're targeting amongst the ones that you already have?
The sectors that we operate, normally 80% of our products are value-added products. So, margin across segments is reasonably high. But you can say aquaculture is the highest margin segment for us, followed by fishing and sports. So all segments that we operate, because we operate at top end and we have a value proposition for customers, we're able to command premium. So margin-wise, I think aquaculture is the biggest, but other segments are also pretty strong. In terms of new segments, we have been entering into new segments. Geosynthetic is a segment where we have done well last many years. It's a very high ROC business for us, and that business is also growing. It's not a new business, but I think we're expanding in a big way. Apart from that, we have entered into material handling, which is just like a test launch for us, and also personal protective equipment. So these are the two new segments that we entered, but this is early days for us. We're just doing test now.
All right, Mr. Rehman, let's focus on the export and domestic split. And whether export margins, are they higher than domestic margins for you? Give us some clarity.
No, broadly it's the same margin. I think export international will be slightly maybe 1%, 2% more. But overall, I think the margin profile in Indian business is also very good for us, because we operate in the domestic mechanized fishing market where we have close to 50-55% market share. And we obviously try and give value proposition to our customer. For Indian fishermen, which is, let's say, almost a 10 million population is dependent directly or indirectly on fishing in India. So the fisherman, obviously, the biggest cost is fuel. And we're able to show to him the fuel saving by using our products. As you may be aware, we are a company which is focused on innovation. We already applied for 81 patents and we've been granted 24 patents. So we spend a lot of time, effort, and energy on innovation. 5% of our PAT is spent on R&D. So there's a lot of innovation which we drive, and our aim is to ensure that the customer gets value proposition and his ROI, return on investment or profit, increases by using our products. That's the overall intent.
Got that, Mr. Rehman. Just hold on to that. Just going to go across to Sonal and come back to you. Well, Sonal, run us through the financials. Crude derivatives are their raw materials, right? Did it have some impact on margins?
Well, that's not been the case for the last couple of quarters, interestingly. But the revenue growth has not been very impressive, Nigel, at around 5% in the last 5 years. Revenues at 9-month mark, they have come in at 935 crore rupees. So they will be able to surpass FY22 numbers going by this. Margins, they have been hovering around 19% in last couple of years. So 19 to 20 and back at 16% now in 9 months. Profit too has seen the same trajectory as revenues, from 105 crore rupees in FY19 to around 158 crore rupees now. Let's talk about the expense split also, because R&D as a percentage of sales is at 1.2 to 1.3% for the company. So that is an important number to watch out for as well. Mr. Rehman, 60% of revenues from products developed for food-related sectors for you, which makes it immune to demand fluctuations is what you told us. But despite that, revenue growth has been lower at 5%. Can you explain what led to that? What are the triggers possibly going ahead?
As I mentioned to you, 80% of our sales comes from value-added products, which has been obviously moving every year. So there are certain segments where we are not focusing, which are very commoditized. So maybe we are giving away some volume and some share in those commodity segments. And hence the overall mix is improving. Our margin is around 20% EBITDA, and we are maintaining that 20% margin. So as a result of this, defocus on commodity segment, you can see that our volume growth or value growth is not so high, whereas our margin is as far as going forward is concerned, I think now that we have reached 80-85%, we are obviously trying to grow go for, let's say, high single-digit volume growth and close to double-digit margin growth or profit. That's our intent going forward.
Well, Mr. Rehman, you're entering into newer products. Will that be margin accretive? Also, what is your margin guidance with the next, 4 to 5 years in mind?
So if you look at our products, I can talk about a product called V2. So if you get, let's say, X dollar realization per kg by using a normal aquaculture cage, V2 is, let's say, 2X dollar per kg. So a customer, when he switches to V2, obviously realization improves for us, margin improves for us, and there's a payback. So 40% reduction in cleaning costs for a customer is what he gets by using V2. So overall, it's a win-win for the customer and for us. So our margin improve. To answer your question, I think it's value accretive for us, margin accretive going forward, because the innovation that we do.
Mr. Rehman, R&D is not a big expenditure for you, but is this a pie which will go up from current levels, considering that you are entering into newer products? How often do you file patent for a particular product, and are these costs very high?
So as I mentioned, 1% of our sales we invest in R&D, 5% of our PAT is invested in R&D. We don't have a set pattern as to how much we should spend. Depends on insighting. We have a strong process of customer insighting depending on customer problems. We try and solve customer problem, and that's why we decide. So this is the time, let's say Q1 or Q4 of this year. Normally we plan for next year. We do a lot of insighting and understand which segments and which products do we invest in terms of R&D, effort and time and energy. So this will continue. There's no ballpark range in terms of expenditure. If it needs more expenditure, we'll be able to invest. It depends on the idea and the technology and the solution.
Mr. Rehman, what about working capital days in an industry like yours? After COVID, did you make any changes to the way you deal with your inventory levels?
So what happened during COVID time, the biggest issue was getting container availability, and freight rates had increased. Now, if you look at right now, freight rates have come down by about 50 to 60%. Availability of container is not an issue. Overall, we have about, let's say, 60 days of inventory and 30 days of net debtors. So about 3 months investment is there for us in terms of working capital, and that's the broad investment that we make. So it's not a big issue for us. What happened during supply chain issues of 22 and some part of 23, customers did try and build up stock and they bought more. That inventory correction is now happened, is happening. I think as we speak also, we're getting good orders now in Q1 for this year. So the inventory correction has happened. Supply chain problems are no longer there. Container availability is not an issue at this stage.
Coming back to you, Mr. Rehman, but Sonal, tell us some risk for a business like this.
Well, since company exports to so many countries, it has 63% exposure to exports. Forex continues to be a risk for them. Input pricing pressure, of course, since crude derivatives are raw materials, and also some of these markets could be regulated for the sectors they operate in. So there are definitely some regulatory risks for this particular company as well. So let me take that across to Mr. Rehman, because, you operate in so many countries. Is this a regulated space in any of the markets you function? Also, are you hedged against Forex risks that I just spoke about?
Yes, so to answer your first question, there are regulations. Entry is not easy for a player because we need to take some approvals and some level of interfaces there with some of the board. We obviously, when we get approval, then we are able to sell. But since we are in the business for many years, obviously we have all the approvals. So for a new player, it's not easy to make an entry. As far as risks are concerned, I think since it's related to food, 60-65% of business is linked to food. There's no risk overall for us. There could be some tax or regulations. Maybe something will happen, but overall, since we hold the most valuable part of the overall product supply chain for customer, which is the fish. So obviously they are not going to compromise on quality of our products. So I don't see any risk. Even in the sports segment, I don't see any risk because colleges and sporting activities are growing at a reasonable pace. As far as Forex is concerned, obviously we always hedge our Forex. We don't try to make money out of it, but I think we do it as a risk mitigation strategy.
Well, Mr. Rehman, what's the updated number in terms of cash and books? Also, you have been continuously paying dividend, right? Will that be the strategy that you continue with, or are you figuring out some other ways to reward your shareholders?
So we have had 2 buybacks in the last 3 years or so. And we always keep evaluating strategies to reward our shareholders. We're also evaluating options for M&A, but nothing is in the pipeline at this stage. But we want to deploy some cash for M&A purpose, and we are, I think, 400 to 500 crore cash on balance sheet.
Okay, so that's a big amount that you have in your book. So any expansion plans that you have in place, what is the current capacity utilization and what kind of capex will you be putting in if there are any expansion plans?
So we have modular capacity. So, we can increase capacity as and when required, and it doesn't need a huge investment. We are operating at about 75 to 80% utilization, and we keep adding capacity as and when required. We invest about 50 crore capex every year. That's for capacity expansion. Right now, there is no need for expansion. We have 2 plants which are functioning well. We don't have a need for a third plant. We will probably be looking at some options of having manufacturing facilities outside India, but that is still in discussion mode.
Okay, all right, Mr. Rehman, final question before we let you go then. Currently you're going at a run rate of around 1,200 crores per annum. At peak levels though, what kind of a revenue number can you achieve, say 4 to 5 years down the line?
I can't give a number, but I think the intent is, as I mentioned, try and have a low single-digit growth in value and double-digit growth in profit. That's the intent we have. and we'll keep innovating, and we'll keep going for new products and new solutions, and keep upgrading our customer relationships with us.
All right, thanks so much for joining in, Mr. Rehman, and giving us an update on your business. Well, Sonal, before we wind down this conversation, give us a sense about valuations as well as the shareholding of the company.
Okay, so let me start with the shareholding of the company. The promoters hold 52.7% stake. Mutual funds are at 5.5%. FPI is whopping at 8.46%. And another listed company, Garware High-Tech Films, is at 1.29%. As far as valuations are concerned, reasonable as far as the industry levels are concerned. Trades at 36.3 times FY23 EPS, Nigel.
Well, thanks a lot for that, Sonal. So that was a deep dive into Garware Technical Fibers. But time to slip into a short break. We'll come back with another interesting stock on our Spotlight segment. Don't go anywhere.